Hey everybody, welcome to another Many Markets video. I'm T, and today we are going to be doing a first look at the Value Investors Club. So yeah, value investing. You should search that real quick if you don't know what that is. I basically came across this after watching a podcast on YouTube that I came across. And so I think it was My First Millions podcast. Anyway, I don't know. I just thought this was an interesting site or interesting community to dip into, and I'm opening it for the second time today. But I didn't look at any of the articles really, or I quickly skimmed to just see how long they would be. But we're just sort of taking a look at this and checking this out. This continues with my sort of series of. I'm just sort of poking around at the world of investing, and seeing what happens. I don't like this site because I want it to be dark mode, and it's not. So I don't think we're going to be poking along. I think this will be a relatively short video. Broad trends giving riding trends. AI run operations. Are there actually AI run operations? This is silly. That's silly. I think. Let's see. Yeah. Sort of institutionalist garbage. Not all institutionalist stuff is garbage, I don't think, but the short case for NVIDIA stock. Skim that. I want to see the thing. It said something about BMW, which, like, this isn't a company that I'm. Yeah, is this? Someone was talking about BMW's. 62% of book value. Okay, so I'm trying to remember what book value is. Like, this is like what it's worth on the books. So it's saying it's trading below the sum of its parts. I think, but also book value, like as an accounting term, it kind of means nothing. Like nothing that actually matters. What does it mean if something is trading below book value? I want the technical answer here. I'm just reminding myself because like this is all stuff that I performed very well in when I studied it, but I've since forgotten a lot of it. Total assets minus liabilities. Yeah. Net assets. All right, so yeah, so net assets minus liabilities divided by total outstanding shares. That's gonna equal to book value or book value per share or whatever. So if it's trading below book value, let's see. We'll pull up BMW. Because that is what this was about, right? Most attractive, yeah. We believe BMW offers one of the most attractive risk-reward profiles in the market. When was this written? So we're getting stuff that was written 45 days ago because we're just using the guest account right now. The stock trades at just 62% of book value. The company holds net cash equal to roughly 75% of its market cap. Profitable financial services division. Why does BMW have the financial services division? That's weird to me. Carries a book value amounting to about 30% of the current market cap. So, okay, I'm not in love with BMW, mostly just because I personally am not. I think German engineering is impressive and cool, but for me personally, I tend not to pursue it. I don't buy a lot of German engineered things. That's an incredibly low PE. Just for comparison, let's do, I want to do Ford. All right, so just for comparison, I want to do Ford. Just quickly for today, like, Meta's up 10%. What's up with that? Trade deficit. Meta being up 10% a day is kind of a lot for how big of a company it is. All right, yeah, this is just a bunch of AI stuff. I just don't really care about. I don't know. I guess I care. I just don't want to deal. China's metals mania sends copper soaring past 14.50 a ton. We've been looking at copper a bit. Sorry, all right, we're getting distracted. What are we looking up here? Ford, where's Ford? So Ford trades at 12 earnings per share, 1.6 beta, 12 PE. These car companies trade at such low, like, price to earnings, like, and I guess it's because margins are kind of rough. I'm wondering, does it pay out dividends? Financials. Where would that show that? I'm like, I can't even think right now. Operating cash flow. Dividend paid CFO. Dividend received CFO. All right. Anyway, okay. So Ford has a PE of approximately. I mean, BMW PE. .58 Ford. What was it? $12.02. Yeah. So what is this as a multiple of this? It's trading at, right? Because it'd be like this times. Yeah, it's 100 and. I never know how to say this, but it's like it's changing. It's trading at 1.58 times cheaper. Like Ford is that much more expensive if we just look at the PE. And so, like, I do want to look at the balance sheet. Total assets 285. Total cap It's weird that I only have the 2024 numbers here. I guess they haven't released yet. Is that true? Whatever. I don't care. Total assets 285. We'll do 0.2. Total cap 148.4. Total liabilities. I got so annoyed with this the other day. And like, I'm like, yeah, all right. This number plus this number equals that number. So we'll do total liabilities. Oh, whoops. Equity. Just do equity there. Whoops. So this is going to be 44.9. Why? Total liabilities. $240.3. All right, so this plus that should equal, or this plus that should equal this, right? So let's do, I want to switch these two rows. Oh. So, should equal that, 44.9, yeah, okay. That is that has a lot of assets. I want to see what the assets are in. Current liabilities, 106, non-current 133. What about this? Total assets. Current assets 124. Non-current 160. What are they invested in? PPE. What does this stand for? Investments in advances. That must be like someone pays them. I can't even think of that right now. I don't care. They have 25,000 in payables. Receivables 66. Inventory 15. All right, so they have PPE at 65, and then they have long-term debt at 105. So they're about, what is that? They're, I don't know, 60%-ish paid off on their net PPE. That's kind of how I'm thinking about that. I don't know if that's how it's broken down, but like, you know, if it's like if someone were to buy a house They're paid 60. That's crazy to me. Employee benefits makes up like 10%, maybe 9% or 8% of their long-term debt and capital. That's crazy. All right, overall though, back to basics. This is like, if these are well priced assets and liabilities, then like um it's still like, it's still, what is this? It's like, it's 18%, it's 19% equity, and what is that? 82% debt or whatever, 81% debt. It's like, it's called a fifth. It's a fifth equity. I mean, that's not, I don't know, man. Like, it's like, right, the assumption here is that people keep buying BMW cars. I don't know, like, I want to know more about their revenue. Like, I want to know what they sell, but like beyond cars, because like, I just don't. I don't know. Cars is such a weird. I like the idea of investing in manufacturing. It seems like such a nightmare to invest in. And the reason why is mostly due to like, I guess across an entire sector, maybe not, but like individually, I just think it's like one of these things where there's like regulations and the regulations create headaches. Um, I don't know. Maybe this is a company I'd look at. Maybe that's a company I'd look at. Let's see what else is going on. So we're not selling stuff, right? That's what this is saying about the trade deficit. We're not selling as much stuff, and we're buying more stuff as a country. If we're talking about the United States. This isn't great. I mean, this is my understanding of it. It's always easy to reverse these things. Imports of industrial supplies fell. Imports of services fell while exports were highest on record. That's interesting. Eh. That's January 2026. January 29th. This is January 8th. I hate that this crap keeps popping up, but whatever. I'm reading free articles or something. I mean, this is just summarizing what it says on government websites, right? Um, Yeah, it's all a headache. This is easier to read on a spreadsheet. I don't like this. That's just blah, 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 blah. You know. Okay. Let's see what this article actually has to say. It's launching a platform. What is the platform? I don't know, man. I just like I'm bullish on electric. I just don't know who's gonna do it best. And maybe they all just will. I don't know. Like, the thing is like, this NASA value. Let's see what they own, half the company. Let's look at holders. This is Ford holders, 0.2% held by insiders. Let's look at yeah. Wow, 50.2%. Okay, so they maintain a lot of control. Interesting. Goldman owns a bunch of it. And Vanguard. Yeah. Where am I right now? 5% dividend. The numbers are just like, the numbers for this like are just, that's just so good. Like, like if you don't think about what it is as a company, I mean, not that if you think about what it is as a company, it gets worse. It's just like that PE ratio is just, I mean, I don't know. Maybe we're just not used to seeing that. What's it done in the last, what was this written? This was written December 15th. I'm tripping right now. December 15th, right? All right, so this gets written. It's at 96 a share, and it has since dropped to 87. What's that? That's like, I like this as a stat. No, I don't want that. 87 over 96. All right, it's dropped 10%. I like this as a thing. Gain / loss since value investor network post. Negative. And this is going to be wrong. It does not drop 90%. Let's do this -1 or +1. There we go. Maybe -1. How does math work? Yep, that doesn't work either. We just want this to be a negative number. This is so messy. But I just don't care. Times -1. All right, cool. Oh, I'm getting warm. Okay. I always spend longer on this than I want. How far in are we? We're about 25 minutes in right now. I probably edited this and cut out a minute or two, but it has a 0.8 beta. I'm actually a pretty big fan of low betas. Maybe someone shouldn't care about that, but like, I just don't need to. I just don't care about like the market in general. It's a headache. So. How is it the cash is 40% of its market cap? How much cash does it have? So it says quarterly. All right, so we're looking at June 2025. It says, so this is 20 billion in cash, right? All numbers in thousands. 44 billion euro. All right, so 20 billion. Inventory is not cash. Like, this is, so, like, also, I don't know what the difference between the euro and the US dollar is, but, like, I don't think it's that much. And I think this is even more to my point, which is that this cash position is not as this is advertising it. What's the market cap of this company? We'll see that in the summary, right? Market cap is 53 billion. Cashed. All right, so what do we say? 21 over 53. So that's 39% of its market cap. Right? Is that what we had? We'll do 22 billion. This is like almost too good. I'm like, what? In a weird way, right? Like, I'm like, what? Just compared to everything else, I'm like, what is this? Is this company like about to go under? And like, anytime I look at a non-American company, just the expenses just always look too high to me. That's not always true, but like, European, like, I'm gonna keep reading because this is I don't just looking at the numbers always is like. This industry in general, I think, was highly. People were just like, this is not the move, because like people had too much car debt. How big is BMW compared to all other companies by market cap? 375th. Oh, we'll go with that. It's fine. Whoops, that's NVIDIA. Here's what's weird about BMW to me. BMW to me is like I don't know what the kids think is cool. BMW is cool to a lot of like old, at least in the States. It's cool to like a lot of like old guys. Really, just old white guys is who I see. But ugh, this EBIT crap. They do make a lot of good points here, I think. I don't know. I'm skimming this. This is the type of thing I sleep on. Feelings. Good points made. By value investors, club people. Don't love the market. Don't know if young people will buy BMWs moving forward. Costs feel high, especially employee costs. See notes. Something like 50.2% of shares are held by insiders. Okay, I'm kind of overlooking at this right now. I'm gonna skip the bull case. And I'm gonna skip this. Major threats. This is where we want. This thread is not convincing to me. Mostly just because I think people underestimate monopolies. This is a bunch of nerd stuff. And nerd stuff doesn't, like, this stuff matters, I think, in like on a 10-year time horizon, maybe. I don't know, man. I'm kind of talking out of my butt here, but this is the type of thing that people dig too much deep into, and like it takes a long time for things to change because this is hardware, right? This is like manufacturing changes. This is just so much, like, that just stuff just doesn't change that quickly. They're basically saying like the chip sizes, and as soon as you start talking about hardware, this is a lot of stuff. This is, yeah. This is too long. Also, look at the length of this article. This is like, when you have to write this much and this much in depth, like, this person's just exploring their thoughts. I mean, maybe there's a lot of good points in here. I don't know, but like, yeah. I'm like, in general, I've been kind of not on the AI train, comparatively to other people that I know that are kind of similarly inclined or something. Okay. What else? What else is popping? Oh man. I thought I wasn't supposed to see these new things. It's confusing. I don't like to touch banks. I don't like to look at banks. I don't know why. I mean, I used to. This looks interesting. Difference. I mean, this is old though. This is also old. Most active. Like what? It says most recent, and then it's like, what is this? This is from 2023. What, like, is it because someone replied recently? No. What? So, I don't know. I'm not, like, this site seems cool in theory. In reality, I'm, like, not super impressed. Maybe I'm just tired. Anyway, yeah, that's that. All right. We're going to start closing stuff down, see if there's anything we miss here. Thanks for tuning in. See you in the next one.